Welcome back to another episode of Freedom Finance with Lanny. And guys, today I'm going to answer a question that I do see a lot, personally from friends and family, but out there on Twitter or X, here on YouTube even, and that's how can you keep investing when interest rates are still high and you could earn anywhere from 4.5% to 5.5% on your money, on your cash. Why would you invest your cash into any other asset but hold it in cash? Well, guys, this might hurt. This might make you upset, but I'm going to tell you like it is. Not to say cash is trash, but the value of cash continues to go down. And I'm going to show you the charts, and I'm going to talk to you about how all the other asset classes typically rise over time. So if you're excited to hear about this, guys, and learn maybe a little bit, maybe you're a new investor, maybe you'd like to hold on so much cash, maybe this will change your mind. So grab your favorite beverage, your beer, your liquor, your wine, because you're Italian this weekend, baby. Get that espresso and coffee flowing if that's what suits you right now, guys. And we're going to dive in to why you don't want to leave your cash as cash and you want to put that to work. Let's get it. All right, guys, we're not going to go down too many memory lanes here with cash. There was, though, a point in time when cash was backed by gold. Cash was considered the golden standard. But then 1970 hit and they took the dollar off the golden standard. It was no longer being backed, collateralized by gold. And, some analysts and reports will show that the value of that dollar since that point has lost possibly 98% of its value. Think about what has happened with the actual currency of cash dollars out there. Are we printing more than we ever have? Yes. Have we printed more in the last decade than we did in the decade before that? Financial crisis, but we'll say yes. Has the amount of it, gone way up over time? Yes, and typically what that means is the value comes down. This is also called your purchasing power. This also correlates a little bit with inflation. So the amount that you can buy with that dollar gets you less and less, guys. And, I always get the questions. We see it all the time in the comments, all the time on Twitter, is why would I invest my cash? This is the exact reason why, is because your cash is worth less and less because it can get you less and less. A good way to put it is, $300,000 of cash 5 years ago can get you that house you've always wanted. Can that same $300,000 today get you that house you wanted? No. Maybe it's $450,000 now. Why? Because the amount of money supply went way up, driving the value of that dollar down. And I'm going to show you some fun charts here if you want to take a look at this one. This really just shows all the way up through, I think the last time they did this analysis or study was 2020. And, it's actually kind of funny when you think about it. When you look at this chart, the value of $1, let me read it really quick. Back in 1913, can get you 30 Hershey bars. Can you buy one Hershey bar for $1? And I'm not talking about the little, finger size, one strip of a Hershey bar. Can $1 even buy you one Hershey bar? It used to be able to buy you 30 about 100 years ago. $1, fast forward all the way to 2020, and the joke here is that $1 can get you a McDonald's drive-through cup of coffee. So, really night and day difference. And the margin still on that coffee is pretty good for a McDonald's, I'm sure. I just want to depict some of that for you. And, again, I get the comments all the time of how I stay invested, why I keep investing when I can earn 4.5%, 5.5% in a Treasury, in a CD. Guys, if I was doing that in 2023, you would have missed out on 24% returns. What's better, a 5% of cash or a 24% return in the market? And this is just the stock market, just one asset class. So that's what I'm trying to say, is that it's not all about keep your savings, keep your emergency savings, keep enough cash to pay your monthly bills, obviously. And then if emergency hits, you set that threshold for how long? 3 months, 6 months, 12 months. Conservatively, we're kind of planning on a two-pronged approach in our house. We've got 6 months if we end up getting the house that we want, which is taking more than years right now at this point, which now equates to about 12 months where we currently live. So keep your emergency cash. But guys, this is why I'm investing. I'm going to show you these charts throughout the video, guys. But, if you look at the S&P 500 chart, again, we're up about 8% this year in 2024. I thought it was crazy when we crossed 4,900. I thought it was nuts when we already crossed 5,000. We're over 5,100, heading for 5,200. So the value of the equity market continues to rise. So why would you want to hold cash when the value is declining? You need to put that to work. The stock market's one of them. That's what I primarily do. VOO, VIG, VYM, plus my individual dividend stock portfolio. That's why I'm investing. Another fun asset class, just look at the value of gold. I'll show a 30-year chart on gold. Gold was just under $500 about 30 years ago. The value of gold now has crossed over $2,000 recently. So is that a pretty good return? 500 to over 2,000 in a 30-year period? Yes, the value of gold is going up because you can't produce more gold, if that makes sense. And then, if that's not enough to show you that you need to get your cash after emergencies and after you always have that right amount to pay all your monthly bills, this is why you need to put it to work, because we will talk about real estate. The median value of every real estate sale, essentially, the median sale prices started, it crossed about 100,000 during the 1980s. The median sale price right now is over $400,000. So put your money into real estate. Not to say it always goes up, because obviously the financial crisis did happen. But over a longer period of time, sure, you might have, blips downwards. But I'll tell you what, there's no blips downwards with the US dollar, then a big spring upwards. So that's why you look at real estate as well as another asset class. And then I will show you just the chart for the last, I don't know if it's been a decade that they've been tracking it here on Google Finance. But yeah, I'll talk about Bitcoin. I don't own much, if barely any at all, nothing really worth even to talk about. But Bitcoin's another one. Why? Because there's a scarce limit to the number of Bitcoin out there. So that's why Bitcoin being used as a possible world currency, that value's gone up. Obviously, we've recently seen it over 73,000. As I'm talking, I know right now here on, March 16th, I know there's like a big drop right now in the cryptocurrency market, and Bitcoin being, enthralled in that too, down below about 66,000 now. But yeah, $66,000. Sure, it's dipped a ton along the way. We obviously know about the crypto winter that we, had back in, what was that, 2022? But obviously it's come back in value. And again, I think, this could be another asset class. So right there, we've talked about the equity market, commodity gold market, the real estate market, and then, I guess you can call it cryptocurrency market. And those have all trended up. If you look at all the charts I'm sharing with you, everything's trending up. Cash trending down. So I'll leave it with this. With you guys. The value of the dollar continues to decline. The purchasing power of your dollar is going to continue to decline. History shows that, and we're currently experiencing that. Just go to the grocery store, just go get gas, just go pay your bills. Go try to buy a house, go invest in the S&P 500, go invest into Bitcoin. Everything is higher. Your value of your dollar is worth less. So get it off the sidelines and go on some uptrend journey here, guys. Let me know what you think. Let me know if that resonates with you. Let me know if that makes sense, guys. Cash is trash in a way, and all the other markets, should provide you actual valuable returns. improving your purchasing power over the long run, guys. Appreciate you guys watching. Definitely like the video. Subscribe to this channel, guys, and I will catch you on the next one.